This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Our markets today were lifted by hopes for more economic stimulus. Investors are also waiting to see more progress on U.S. China trade relations. MSCI's index for emerging market stocks jumped 0.9% on the day. Now on the continent, South Africa's JSE was firmer and on its third day of gains. Its main stock index jumped over 2%, tracking its best day in more than a month. As of course, we saw gold miners rallying on the back of a jump in gold prices. Now, mining firm Gold Fields led the charge with a 10% jump, and that's after it said half-year profits could rise by more than 300%, thanks mostly to an increase in gold prices. Now, also coming up on today's show, South Africa's ban on the sale of alcohol could cost the economy $742 million. Popular Chinese video app TikTok has just under 2 months to either seal a deal or face a ban in the U.S. And Ethiopia unveils its first locally assembled electric car in a joint venture with Hyundai. Now, tonight's global business begins in South Africa, where the ban on alcohol sales has dealt a blow to President Cyril Ramaphosa's drive to lure about $100 billion in new investments by the end of 2023. Investment projects worth at least $742 million have been put on hold as alcohol companies face an uncertain future due to COVID-19. Restrictions. Belgian-Brazilian company AB InBev South African unit has stopped its plans to spend about $289.9 million, while glass manufacturer Consol Holdings says it is suspending building a $86.9 million production plant in the country. Dutch brewing company Heineken has also confirmed it has stopped work on a $347.8 million brewery. Wine and spirits maker Distel has stopped all discretionary spending and shelved $17.4 million of South African capital projects. Now, the ban, which was introduced to curb the spread of COVID-19 back in March, has since cost the industry about 117,000 jobs. Now, even before the coronavirus triggered the COVID-19 pandemic, global diamond prices and demand were weak. But some of the many small players who polish the rough diamonds that South African miners unearth say that they are now, or they've been pleasantly surprised by the extent of lockdown jewelry buying. Here's CGTN's Terry Wangari with more.
Firms have been pleasantly surprised on the recent increase of jewelry buying. One South African cutting and polishing firm says its custom-made jewelry sales have grown 60% since South Africa imposed a strict lockdown in March.
Never let a good disaster go to waste. I'm by no means suggesting that COVID-19 is a good disaster. What I'm basically saying is there has been opportunity in it, and we were fortunate to see the opportunity, to say, let's use social media, let's use different platforms to remain relevant. So to answer your question in short, simply, yes, it hasn't affected our business adversely, thank God. And we continue to grow even through this challenging period.
June was one of the best months in a year, according to Nungu, with sales including engagement and wedding rings. Customers used their weeks at home for online consultations and were lining up for their purchases when stores reopened in June. But some firms like De Beers were not so lucky.
Diamonds being a luxury product, and in times of crisis, the first spending that people will cut back on is luxury diamonds. So all diamond manufacturing, mining entities have been impacted significantly as a result of COVID-19. And what does that mean? the absence of international travel, which is because in the diamond industry, it's face-to-face. It's a traditional industry where people still thrive on human interaction, one. Second is the lockdowns in the various key markets that have been in place since late February. The key markets being China, the U.S., India, Europe, Israel. So those lockdowns and the absence of international travel have led to a significant pause in trading activity in the diamond industry.
Jewelry prices have held steady. Profit margins, however, could improve as lower global demand has depressed the prices of uncut, unpolished rough stones bought from the mines.
We supply more than 500 carats, from half carat to 1.5 carat. 2 carat, probably 20% of that whole chunk. So what that means is that due to COVID, I mean this year, I mean we've only sold less than 20 carats. So you can imagine in terms of revenue how much we've done.
South Africa's diamond industry is now looking closer to home to revive its fortunes following the coronavirus slump.
Where I'm specifically passionate is in seeing South Africans and Africans consuming these diamonds. It's one thing to go all over the world and telling people what they know. They know our diamonds are amazing. It's another altogether to educate our local South Africans and Africans to say, begin to enjoy them and also learn their value, because they're a store of wealth.
South Africa's diamond industry is famed for supplying gems for the British Crown jewels. But with the recent rise in demand, it's hoped that this will appeal to the local market across Africa. Terry Wangari, CGTN.
And elsewhere in South Africa, the first batch of locally made ventilators has rolled off the assembly line at a plant in Cape Town. The equipment will be sent to hospitals to help treat severely ill COVID-19 patients. Well, Travis Andrews has more with this report.
It's called the CSIR Life, and it's a new South African designed ventilator which is meant to save the lives of those severely affected by COVID-19. The machine is being assembled by Acacia Medical, and it's a non-invasive continuous positive airway pressure device, a unit that the government believes will have the greatest chance of saving lives. It's ordered 20,000 to build up capacity in hospitals who weren't able to source them from overseas markets.
So our involvement with the CSIR Life CPAP project began a little bit over a month ago, when we were approached about the possibility of assembling the device and patient circuits for the National Ventilator Project on behalf of CSIR. So Acacia recognized fairly early that this was a national imperative, and we've been happy to assist in getting this project into production.
The ventilators will be used to supply oxygen to ill patients in the country, who currently make up around 5% of overall cases. While final assembly is taking place in Cape Town, some components are being imported, including from China, and production of the assembly line is being stepped up.
We have 150 units, which are ready to basically go into the sterilizer. They are going to be sterilized during the course of tonight. It is our intention by the end of this week to have approximately 1,000. In terms of the order quantities, at this moment in time, we are looking to produce 10,000 of the units, but that could go up as demand requires.
South Africa's Department of Trade and Industry is leading the efforts to have these ventilators built, and it comes as the number of positive cases hit more than 500,000. COVID-19 has not only struck South Africa hard, but it's also affecting the rest of the African continent as well. And that has put the ventilator being manufactured at this facility in high demand.
We actually do believe that once the local demands have been met, we'll move into the next phase, which is producing units for relief required in other African countries that have been affected by the pandemic as we have.
For now, production continues in earnest of these life-saving machines that will play an important role in dealing COVID-19 a fatal blow. Travis Andrews, CGTN, Cape Town.
And now a quick look at our corporate headlines today. South African miner Gold Fields' booming gold prices could drive up half-year profits by more than 300%, triggering a 10% rally in its shares. Now, the miner says the rise in earnings for the period is largely driven by the increase in the gold price. Now, this is in spite of the COVID-19 pandemic leading to shutting down of mines in South Africa. And still in South Africa, the Labour Court has ordered state defence firm Denel to pay its workers outstanding salaries for May, June and July by no later than Friday. The case against the weapons manufacturer was brought by two trade unions, Solidarity and UASA. Now, Denel has struggled to pay staff salaries amidst a liquidity crisis aggravated by the COVID-19 pandemic. It is one of a number of struggling state enterprises the government has been keeping afloat with bailouts. Meanwhile, Kenya's telecoms firm, Telkom Kenya, says it's no longer pursuing a proposed joint venture transaction with the Kenyan unit of India's Bharti Airtel. Now, Airtel had agreed to buy Telkom back in February 2019. Telkom added that the decision was mutually agreed with Airtel. And South African telecoms firm MTN is planning to sell part or all of its $243 million interest in Jumia Technologies. According to sources familiar with the matter, MTN is reviving its plans to sell after Jumia's shares surged 142% this year, recovering from a dip in 2019. Johannesburg-based MTN has been disposing of non-core assets as part of the company's strategy to reduce debt and drive future growth. And that is a look at our corporate headlines. Well, we are heading into a short break, still to come on the show. Ghana introduces relief measures that will help its residents hardest hit by the COVID-19 pandemic. And struggling car dealers are now calling for more support from the Tanzanian government.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global Business, only on CGTN.
Every story starts out like this.
Okay. We'll head up now.
But beyond the rush of the numbers, there's always a more fundamental question. What happened? Who has been affected? When market-moving decisions are made, who's responsible and why?
Let's get some reaction on ground. Joining us in Johannesburg is Sutra.
Hello, Naro.
This
Well, of course.
is how all stories begin. See how they end. Only on Global Business.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home, and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Africa is the nexus of enterprise, and global business will tell you why it matters.
From the mega investment projects to multi-billion-dollar mergers and acquisitions.
Africa today collects, just in terms of revenues from taxes alone, $545 billion a year. If you take 10% of that and you devote it to the energy sector, problem solved.
All this on Global Business, weekdays at this time on CGTN.
Welcome back. Well, let's head to Ghana now. The country is one of the nations in West and Central Africa most impacted by the outbreak of the COVID-19 pandemic. And while its economy is struggling to recover, the government is now announcing a number of relief measures, including free water and electricity to help its residents. Here's CGTN's Nabil Ahmed Rufai with more details from Accra.
Anayebue's work at this salon suffered a setback when Ghana went into lockdown in March due to the coronavirus outbreak. Her only source of livelihood was on the line when she closed her salon to customers.
People come to do their hairs, pay us and all that so that we can get a little bit of money for ourselves. But since we were not working, we had no money on us and all that.
As the government lifts restrictions, businesses like Anna's have begun to open, but it will take some time for them to recoup their losses. Official statistics show 42,000 employees were laid off during the lockdown, and the impact of COVID-19 on businesses still lingers. Anna's salon can, however, enjoy the free water supply for the next 3 months and free electricity for the rest of the year. It's part of the government's relief to citizens and businesses impacted by the pandemic.
Now that we have free water, free electricity, we want a constant supply so that it will help us flow in our business.
The government has also set up a $347 million fund to support all sectors of business and create jobs. The government says this intervention could support economic growth after the shocks caused by COVID-19.
As the government tries to stimulate economic growth with the relief packages to citizens, it is also looking to slash capital expenditure by $216 million. It hasn't specified where the cuts will come from, but some economists worry it could affect plans to invest heavily in infrastructure this year.
Already, the government's spending has gone up due to the unbudgeted COVID-19 containment measures. Meanwhile, revenue generation has fallen below target due to the slump in crude oil prices, among other factors, as a result of the pandemic.
Our trend in terms of capital expenditure as a percentage of GDP is actually on a decline. That actually gives an indication that we are more or less trying to stimulate growth and then minimize the impact of COVID-19. But the other aspect is trying to get ourselves out of the lower middle income economy. Yeah. So that's where we have to do more.
Businesses like this salon are doing all they can to bounce back from the hardship caused by COVID-19. Although the government's relief could boost their efforts, economists say it is only a short-term solution of dealing with the impact caused by the pandemic. Nabil Ahmed Rufai, CGTN, Accra, Ghana.
Well, still in Ghana, a company called Neplast Eco is trailblazing conservation efforts. The firm went from making plastic bags to recycling them to be used for bricks made of sand and plastic. Now, the company hopes to one day provide a sound, environmentally friendly building alternative that could also pave all of Ghana's streets.
In 2015, Nelplast Ghana Limited anticipated a shift in policy and adopted a green campaign. Mindful of an impending ban on plastic bags, the company, which originally made plastic bags from recycled materials, decided to upcycle plastic bags and plastic waste.
During 2015-2016, there was a threat on ban on plastics, and I was then into plastic bag manufacturing. So I have to think of a way to keep the business going by going into the bricks instead of producing polybag with plastic waste. Second is anytime they mention about flood, pollution in the environment, I feel very bad because I know I'm a big contributor. So that Those are the things that move me from producing a poly bag to the bricks. Because with the bricks, it goes out not to pollute, but also to save the environment.
In 2018, Nelplast Eco Limited was set up as a plastic recycling and building materials company. Today, it employs some 74 workers with an additional 300 plastic collectors who pick up the raw materials from open-air dumps, blocked waterways and abandoned sites.
People always say plastic is the problem. But for us, plastic is not a problem. It's the humans that are the problem because we are not taking responsibilities of our actions. People throw away the plastic, they dispose it off in any way they want. The plastic never flies to our beaches. We carry them out there. So plastic is not a problem. We humans are the problem for not finding solution to the plastic that we see around.
The company produces 600 to 1,000 bricks a day from around 2,500 kilograms of plastic. Eco bricks are 30% cheaper than concrete. The mix, made up of 30% plastic and 70% sand, is transferred into an extruder which turns it into paste that is then molded into tiles, paving, bricks or blocks.
We can be able to compete with the concrete producers if we are able to expand our production capacities, because they are doing over 20,000 bricks per day, whilst we are doing 1,000 due to lack of machineries and space to operate.
Championing the quality of the eco bricks, the company says it's better than concrete because they are lightweight, stronger and more durable. They also offer better insulation.
What I see in the future is very big, that one day this plastic waste will be turned into bricks that will be used to pave most of the roads in Ghana. They're also saving the environment from plastic waste and its implications.
Boateng says he wants to rid Ghana of the plastic waste that is polluting the environment and water bodies, and also secure job opportunities for the local collectors while advancing the global sustainable agenda of the United Nations SDGs. Beryl Oro, CGTN.
Now, more and more South African companies are making their way out of Nigeria. As you already know, Shoprite Holdings is one of them. Two other South African brands, clothing firms Mr. Price and Woolworths, have long left the country. Well, CGTN's Deji Badmus tells us more.
It was a big deal when it opened its first outlet in Nigeria in 2005. Literally everyone wanted to shop at Shoprite. The retail outlet basically drove other existing local retailers on the ground with its eye-catching stores and cheaper prices. But 15 years on, 26 additional outlets, Shoprite is now calling it a day in Nigeria. The South African retail giant says lockdown restrictions because of coronavirus had affected its operations in 14 African countries, including Nigeria, with sales declining by 1.4% in those markets. But some experts say the retail outlets' troubles in Nigeria go beyond that.
We already have Nigerian supermarkets that even Shoprite themselves included in the reasons why they found that the market was almost so profitable, that increasing competition in the market had made it less profitable. And that competition is largely Nigerian-owned supermarkets. They're largely, in fact, you may only count one supermarket chain that is not Nigerian that is giving Shoprite all that competition to the point of making them want to leave.
Whatever the case, economic analysts say the decision by the retail giant to pull out of Africa's biggest market does not paint a positive picture for Nigeria.
It sends a negative signal to the investing community globally. So it has a negative or adverse signaling effect, for Nigeria as an investment destination.
Shoprite has been by far the biggest retail supermarket in Nigeria for the past decade, opening outlets in several Nigerian cities. But in the last 5 years, it's faced some very stiff competition from some local retailers who have since bounced back after their initial displacement by the retail giant. There's also the issue of repatriation of funds. With scarcity of forex in Nigeria, Foreign investors have found it quite challenging repatriating funds to their home country.
From the point of view of economic management, we need to worry about our foreign exchange policy, because it is not going to be easy to be able to retain foreign investors here or to attract new investors if you continue to have challenges with our foreign exchange policy.
The exit of ShopRite might not necessarily mean the exit of that brand name from Nigeria. The firm says it is in talks with potential investors. Now, depending on how that process goes, that potential investor might decide to keep the name as a franchise, because that name has come to mean a lot for many of its customers in this country. Deji Badmos, CGTN, Lagos, Nigeria.
Meanwhile, in Tanzania, car dealers and importers are asking the government to offer some form of tax relief as their businesses continue to struggle. The COVID-19 crisis has severely affected vehicle sales and left many car dealers struggling to offload their stock. Here's CGTN's Daniel Kijo reporting.
The slowdown in travel and transit was one of the most visible signs of the COVID-19 pandemic in many parts of the world. But for Tanzanian car dealer Mohamed Maksud, this meant low sales and uncertainty of livelihood. Restrictions imposed to curb the spread of the disease, such as lockdowns and social distancing measures in Asia, have impacted supply to Tanzania. He says over 3 months he has lost 80% of his sales.
So we are facing big problem to sell the cars. And we cannot, even the promotions and other things are not working because the people, they don't have extra money to buy the cars.
According to the UN, more than 1.2 million used vehicles were imported into Africa in 2017. Toyota has over 25% of the market share, followed by Ford, Nissan, and Mitsubishi. Mohammed says an average-sized car showroom like his normally sells 10 cars a month, but now he's struggling to sell one. Importers say customers have held back purchasing of vehicles following the uncertainty caused by the pandemic, while others have seen their income decline due to job losses. According to an online market research site, Capgemini, 58% of potential customers have postponed the buying of a car due to financial reasons. Most of the cars in the East African market are second-hand and come from Japan, the United Arab Emirates, the United Kingdom, Singapore, and South Africa. Due to the decline in sales, car importers like Chiku Yahya are asking the government to reduce taxes and storage costs.
They should reconsider the tax rates, also the storage issue. We have free storage at the port for 7 days, but now, as a side effect of COVID, we ask that they reconsider and push it up to 30 days, if not 14 days at least, because getting money to pay for many days of storage has become harder.
If not 14 days,
According to recent survey data of consumers by Deloitte, the customer pullback is expected to have long-term implications for car dealers like Mohammed and Chiku. They will need to be creative in offering discounts to keep customers buying, because for car dealers, it's a bumpy road ahead. Daniel Kijo, CGTN, Dar es Salaam.
You are watching Global Business Africa. Let's take a quick break now, but still coming up on the show. TikTok has just under 2 months to either seal a deal or face a ban in the U.S. And BP turns its efforts to renewable energy after cutting its dividend for the first time in 10 years.
No one again, he can hold in guns. Machine guns from police forces toward the protesters.
Were you worried about your life at that particular time?
Not at all.
Thank you very much for your time. What is your assessment of the state of the continent today?
Africa has the potential to power itself.
Excuse me.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant. Only on CGTN.
Well, let's turn our attention to some international business news. Beijing says it will always keep the door open to the U.S. for candid, respectful consultation to resolve issues straining its bilateral relationship, which is now at its lowest point in 4 decades. In an exclusive interview with Xinhua News Agency on China-U.S. ties, Chinese State Councilor and Foreign Minister Wang Yi says he does not share the Trump administration's view that dialogue is futile.
China-U.S. cooperation has never been a case of one party giving favor to the other or one party taking advantage of the other. Both countries have benefited much from this cooperation, and no one is being taken advantage of or being ripped off. Mutually beneficial cooperation over the years have turned China and the U.S. into a community with shared interests. China has achieved rapid growth in part thanks to its opening up to and cooperation with the rest of the world, including the U.S. China's continued growth have also created sustained demand and enormous market for the U.S. and other countries. If China-U.S. cooperation were unfair and not reciprocal, how could it have continued for several decades? How could China-U.S. ties have come such a long way? Globalization and free trade have delivered development dividends, but they have also created tensions for countries and affected their economic structures and distribution of interests. This should be dealt with through internal reform. Acting like a sick person who forces others to take medicine for his own illness or even restoring to decoupling will not work. It is the American companies and people that will get badly hurt. In the globalized world today, the interests of countries are closely intertwined. The development of China and of the U.S. is not a zero-sum game, and we should not reject each other. What we should do is to draw on each other's strength to achieve common development. As COVID-19 takes its toll on the global economy, China and the U.S., the world's 2 largest economies, should work for mutual benefit on an equal footing, stop attempts at decoupling, and advance the relationship through cooperation, and live up to their responsibility for the world.
Meanwhile, U.S. President Donald Trump is demanding that an American company buy TikTok and that the government should get a cut. The Chinese-owned app faces a ban next month unless it can find a buyer for its U.S. operations. Well, CGTN's White House correspondent Nathan King has more.
Once dubbed the happiest place on the internet, TikTok is now caught in the crosshairs of a U.S. pressure campaign against China. This weekend, U.S. President Trump went from pledging to shut down the service to agreeing to negotiations with Microsoft to buy its U.S. operations. But then President Trump had other demands, setting a September 15th deadline for the sale and saying the U.S. government should get a big cut of any deal.
I said a very substantial portion of that price is going to have to come into the Treasury of the United States because we're making it possible for this deal to happen. Right now, they don't have any rights unless we give it to them. So if we're going to give them the rights, then it has to come into this country.
Is this a finder's fee? A shakedown? Is this legal? The reaction in the US and globally has been one of surprise. Beijing says this is unprecedented and wrong.
The U.S. suppression of the relevant company out of so-called national security holds no water at all. The relevant company carried out business activities in the U.S. in accordance with market principles and international rules and abided by U.S. laws and regulations. But the U.S. has imposed restrictions and suppressed them on unwarranted charges. This is complete political manipulation.
TikTok's owner, ByteDance, is trapped in a geopolitical game that seems to have no rules. The company has been urged to resist by some Chinese citizens on the internet, but founder and CEO Zhang Yimin indicated in a memo to staff that the company may have little choice but to get a deal or face being shut down. He said, "The current geopolitical and public opinion environment is becoming more and more complex. We are facing great external pressure in some markets. Our team in response has been working around the clock and overtime in the past few weeks to strive for the best outcome. Whatever the outcome, the company is considering moving its global headquarters from Los Angeles to London." The showdown over TikTok has been brewing for months. Some hawkish US politicians have said without proof that TikTok is a security concern for Americans. Now, the company has offered to share its algorithms, open its data, and also share some of its code to no avail. It's learning, like other companies, Huawei and beyond, that being a successful tech company with Chinese links these days brings a backlash politically and sometimes economically too. Nathan King, CGTN at the White House.
Well, TikTok now has around 40 days to negotiate a deal with Microsoft, or it will be banned from the U.S. White House spokeswoman Kayleigh McEnany said that the U.S. will take action on not only the popular short video app, but also other Chinese apps.
I'm not going to get ahead of the president on any official action, but he has made that point, and he and both Secretary Pompeo have said that the U.S. will take action in the coming days on Chinese apps, including TikTok, due to the national security risk. And we all agree that there needs to be a change, especially with TikTok collecting significant amounts of private data on users. It's unacceptable, but I won't get ahead of the president on what those actions look like.
Well, let's move on now. BP became the latest petroleum company to reduce its dividend in light of this year's deep oil market downturn. Now, the energy giant slashed its quarterly payout by about 50%, which will halve its yield from its prior level of 10.7%. Here's CGTN's Andrew Wilson reporting.
This is the first time BP has cut its dividend since the Gulf of Mexico disaster a decade ago. Its quarterly losses this year are marginally worse this time, but much of that is due to writing down the value of assets, future exploration returns, and of course a coronavirus pandemic that virtually shut down the global economy. In April, crude prices went negative, meaning producers had to pay buyers to take it off their hands. The decision follows a similar cut in shareholder dividends by Royal Dutch Shell a few months ago for the first time in decades.
This dramatic cut will, of course, alarm the big UK pension funds that are traditionally heavily invested in fossil fuels. And yet it also coincides with a stated determination by the new BP chief executive to increase the company's investments in low-carbon energy tenfold, from $500 million to about $5 billion, with a promised ambition to become a net zero carbon company by 2050.
Number one is to be net zero across our entire operations on an absolute basis.
So far, the share price has held. The dividend cut was expected, but rhetoric like this may have helped as well.
The world does have a carbon budget. It is finite, and it is running out fast.
An oil giant's plan to boost renewable power generation to 50 gigawatts and shrink oil and gas production by 40% would have been laughable 5 years ago. But these are interesting times. Andrew Wilson, CGTN, London.
And on that note, let's take a look at how commodities performed today. Gold prices rallying into record territory. Spot gold rose above $2,000 per ounce. Now, traders say investors are cautious about the increased geopolitical risks and, of course, prospects for further stimulus. But analysts also add that we could see gold extending those gains further, maybe up to $2,300 per ounce, of course, as its appeal strengthens and the dollar weakens. Meanwhile, oil prices firming up today, with Brent crude rising over 3% at some point. That's after data showed that a big drop in U.S. crude inventories. And a quick look at platinum. The metal continues to rise as miners cut their production targets. Traders say they expect prices to continue to rise gradually through 2021. Well, let's take a short break now, still coming up on the show. We bring you an internationally acclaimed studio that's also uplifting South African local artists. And Ethiopia unveils its first locally assembled electric car in a joint venture with Hyundai.
Images may appear to be identical, but looks can be deceiving. The difference is not always obvious. It has to be discovered. There are always different sides to a story. We put the focus on the details. To see more, to understand better. CGTN. See the difference.
The greatest journeys, the greatest sights, the greatest adventures.
Here in Ventilator, this weir allows the locals to walk on water.
We're far more than just TV news. We're your passport to the wonders of Africa.
To bring you stories of struggle, survival and hope.
So let's explore. CGTN. See the difference.
My family has been doing this artwork for the past 600 years.
My dream is to be the leading player in Africa in the spice sector.
Nobody in the region consumes it. Even me cannot afford the vanilla cooking.
What we've created here is the elegance, the color, the celebration of life.
Now, for 34 years, Ardmore Studios has crafted original ceramics that have provided income to feed many families in KwaZulu-Natal province in South Africa. Trained by Ardmore's founder, Faye Halstead, 80 painters and sculptors transform African art into ornamental pieces. Items have been sold by Christie's and Sotheby's. Now, despite its international success, it has remained true to its roots, trained and developed local artists, as well as caring for a community hit hard by HIV/AIDS. Today, the studio is an institution in South Africa and continues to shape and change people's lives.
I was angry. I wanted to teach people, and I thought, well, if I can't teach privileged whites, I'm going to help people who don't have opportunity. My name is Faye Halstead. I grew up in Zimbabwe, and I came to study fine arts in South Africa. And I was lecturing. I majored in painting and started working in ceramics, and I was lecturing in Durban, and I lost my job. I was angry. I wanted to teach people, and I thought, well, if I can't teach privileged whites, I'm going to help people who don't have opportunity. And I started working with Bonnie and Chalanchali, our maid's daughter. It's been a fairy tale story. It's grown now to include about 80 people, and we live here at Caversham in KwaZulu-Natal. I didn't choose to make Ardmore so detailed and intricate. What we did by working with the Zulu culture is they have always created the most exquisite craft. This beautiful, colorful brand of Ardmore, I think what it is that this continent and this country is so rich in so much elegance, sophistication. It is inspiration for artists. Picasso, so many artists have been to Africa to get inspired. It's the rawness of it. And what we've created here for Ardmore is the elegance, the color, the celebration of life. And for me, that is what has been Ardmore's success. Through the years, we've just grown and grown and grown, and we've developed the most amazing work. I don't think there's anything like it in the world. And to see people start at Ardmore, I say, remember this day. They come, they've lost their parents from HIV, many of them have. We got hit hard with HIV with the artists in 1985 was one of our first artists died, and we worked really hard with them, but in those days nobody wanted to talk about it. So many of my artists, we lost at least 40 wonderful, wonderful artists, including Bonnie. It was very painful to lose these artists at the time, and I took a very positive approach. I made a hospital at the studio, and I kept artists with me close. We nursed them. Now, since 2010, most of the artists are on antiretrovirals, and they've lived very well with being HIV positive, and we haven't lost one artist. My children grew up with Ardmore. My two daughters are very, very creative. They studied fine art, also in Pietermaritzburg University, and my son studied business. When he'd finished school, I said, you know, I can't really leave you much, but we could have fun starting a new business. And why don't we take these fabulous designs off the ceramics and turn them into fabric? And we started that business in about 10 years ago now. And it's been such a fun journey working with the kids, and my daughters are the designers. And in fact, in 2013, we were discovered by Hermès, the French wonderful luxury brand in Paris, and Catherine has designed the most exquisite scarves for them. And then also 2-3 years ago, we were discovered by Cole & Son in New York. Our work was discovered there, and we've produced the most fantastic and one of their most popular selling wallpaper designs that we did with them. And in fact, in 2021, we're going to launch this #2 collection. So that's very, very exciting. I think our worldwide success has come about because we've produced a new visual. It's a bit quirky. It's raw, it's naive, in a beautiful sense of life. This feeling of what we've achieved here, I cannot tell you what it feels like. I lie in bed at night and I go, sure, I've done something good, you know, something in my wildest dreams has happened, but it's come from hard work and dedication. What is my dream is to continue, to just see that once I'm gone, the Ardmore Studio and the artists and their children have continuity, and to put steps and measures in place that they become self-reliant on me. So my visual is for me to be able to step back and to watch my teachings come out.
Well, let's head to Ethiopia now. The country has unveiled its first locally assembled electric car in a landmark joint venture with Hyundai. Now, the car's manufacturer, Marathon Motors, has installed an annual production capacity of up to 10,000 electric vehicles and says when fully charged, the car can go up to 300 kilometers. Well, CGTN's Girum Chala had a first-hand experience with the car and filed this report.
It is named Ionic Electric and assembled here in Ethiopia for the first time by Marathon Motor under the Hyundai patent. This is a beautiful car from outside and a fully chargeable front-wheeler car at the same time. Now, let's see what it feels like to drive the first electric car in Ethiopia. Well, the inside looks to be wide enough for a tall guy like me and fitted with state-of-the-art equipments, including the radio system itself. The Ionic electric car is keyless, but this, however, is its remote and must be all the time inside the car so that the car can start and do other functions. And you simply press a button on the right side of the steering wheel. And the car is on. This is an electric car and it is absolutely quiet in the cabin and everywhere else at the same time. The car has also electric gear buttons. Now that the engine is on, I'm ready to drive it. And all you have to do is press the D button. It's engaged in a drive mode and the parking is released, and we're about to hit. Whoa. I must tell you, it's a bit weird to drive a car with no noise as we are used to with petrol and gasoline cars. But this is quite comfortable and speedy too. In fact, it can go 120 kilometers per hour easily in a few seconds time with that electric motor in it. Now, the plan with Marathon Motor is to introduce an electric motor-based cars to reduce emission and produce environmentally friendly cars in Ethiopia. And they want to be pioneers, and they have made it happen.
The vision for the next 10 years with this assembly plant is to ensure that it's functioning fully with various cars in production. We are working to become East Africa's most reputable and exemplary vehicle company.
Ionic Electric is a car that is fitted with a motor, electric motor that is of a capacity of 136 horsepower, and that is quite enough horsepower to take you anywhere, quite fast too, as you've seen me driving. But how do you really charge it? You find the charging equipment here at the back, and this is the cable that you use to charge your Ionic Electric. What you can do, there are two ways of charging it. One is a normal charging spot that anyone can use, and this is called a fast charging unit, as you can see here inside. But the other, and what makes this Ionic Electric car much more convenient, is the spot right here. It is a charging spot that can be used at any house unit using normal sockets. What you can do, you plug your car like this, and just like a normal socket in your household, you just plug it like this. And voila, your car is now charging. And once fully charged, the Marathon Motors engineers have told us that a person can drive this car 300 kilometers in just one full charge. And that is actually very interesting and something very economical. This car is a game changer in the car industry, not only in Ethiopia, but for the continent of Africa as well. One, it allows a person to economically run a car like this and have a normal, beautiful car under his or her possession. And two, the amount of money you pay for fixing cars, for services, is now significantly avoided, as you have no normal motors or other equipments as we always know it.
Till today, until this century, the whole world just were driving a car with the petrol and with the gas and benzene. Now after this, what we're gonna do, of course, not only here in Ethiopia, the whole world, they have to, because of many reasons. The first reason, as you know, just this global warming thingy, very important. And the other thing, as you know, this is cheaper than the petrol.
There is now a plan from Hyundai and Marathon Motor owners to distribute this car in Ethiopia in large numbers and also across the continent.
The capacity is 36 cars a day, which means around 10,000 a year. Maybe not the whole Africa, at least the East Africa we can able to distribute our product because this assembly plant, as you see, it's a good one, it's a nice one. Well, slowly we are going to expand the potential. And what's important from this assembly factory, the knowledge transfer.
Marathon Motors is now planning to produce this car on a large scale so that it can distribute it across Ethiopia. And already the interest from the public is rising as orders are coming. We've heard from the management here. Grumtala CGTN, Addis Ababa, Ethiopia.
And before we go, let's take a quick look at how Africa's currencies performed today. Now, most emerging market currencies continued their advance against the backdrop of a weaker dollar today. South Africa's rand bounced back from 2-month lows, on track to break its 6th consecutive losing trading sessions. It lost about 2% on Tuesday as investors moved to safe haven assets, but it did manage to firm above 17.5 rand per dollar. Meanwhile, Nigeria's naira continues to depreciate across the official and black markets as dollar liquidity in the country remains low. On the black market, the currency is trading at between 470 and 480 naira per dollar, and on the official market, it continues to hover around 388 and 389 naira per dollar. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.